Mr. Mark Selby, how are we, sir?
Mr. Matthew Gordon, good to see you as well.
Yeah, well, I had a bit of a hangover last time I saw you. Caught up in London.
I might have
had a glass of wine.
More slowly the next morning myself.
Yeah.
For some reason.
That happened. Mm-hmm. Acclimatization to the weather, I suspect. That's what I'm blaming
There's
on.
the flu virus, jet lag. Well, jet lag for me. That's my story. I'm sticking to it.
Quite right. Well, I enjoyed meeting you. Enjoyed sort of talking around we talked a bit about industry and what's going on, maybe some of the innovation coming down the line, some of the conversations around, the whole supply chain, and perhaps where some relationships could be had and allegiances could be made. But first, today. We got to talk nickel. We'll share some of that knowledge with everyone today. But I'm gonna before I do that, I'm gonna slightly ambush you, right? Because there's a question sent in by Lee in Percent, and it's just I think it's quite a good thought and needs to be dealt with, right? Yeah. So basically, when we talked last week, we interviewed you with your Canada Nickel hat on. You explained the strategic partner position and means to an end to get the money that you wanted to remain in control for what you got to deliver this year, increased resource and feasibility study at the end of the year. Okay, that makes sense. But Lee's made quite a clever and astute observation, which is, hang on, you guys had your data room open and presumably a bunch of strategic partners, investors stepped into the data room, had a look around, yet no one decided to go forward. Now, was that because they didn't like what they saw, or you guys couldn't come to some sort of agreement over numbers, or did it even get that far? I mean, what was your response to that?
Yeah. So as I said, sort of first off, there were one group, who we were right at the finish line. Like the closest I've been to the finish line without getting a deal done has happened only one other time in my career. But in terms of the other parties, that's a valid question. Is why didn't they move that quickly? The key thing is, if we were something that looked like 25 other nickel deposits that are in operation, and they couldn't figure that out in the time frame that we were talking about having a strategic investor, then giant red alarm bells should be going off. But the reality is large mining companies are slow, conservative groups. And so if you've got something that doesn't look like everything else in the marketplace, they really need to take time, and they only kind of jump in if there's, sort of some outside pressure suddenly emerges, or they think something's going to happen, that's going to make this asset disappear. And so if you look at the deals that have been done, Noront, Wyloo and BHP, in a bidding war up to $1.10. Again, I've said this on the show before, 3 years ago, that was sitting there at 12 cents. They've all been in the data room. There was multiple times where that asset was for sale, could have been had for a fraction of the price. There was no new information with that asset over the last 5 years, and they didn't step in. If you look at, BHP invested in Kabanga, again, that deposit has been around since, was discovered and first explored in the 80s, delineated quite significantly in the 1990s. Again, multiple times for them to come in and make that investment, and now they've done it, at a multiple of what they've got. So again, we didn't cast out a wide net. We only went to a very small number of groups because, again, a lot of people kick tires. It takes a huge amount of time and energy. So we work with a relatively limited number of groups during that process. But there are groups that are still going. Again, they just take more time. The other big guys will also come to the table, and will reach out. When the feasibility study's done and we're further down the path at that point. But as I said, if we look like everything else, big screaming red lights. But because we're a somewhat new deposit, a new class of deposit, it'll take some of these bigger guys a lot more time than you think.
Okay, so it's a new data room, not people just having a look around. In your experience or your view, did any of them walk away and say, "Hey, thanks for letting us in. It's not quite right for us now, but we'll be back"? and you talked about one particular strategic who perhaps had a few other things going on or falling down elsewhere, which may lead them to say, well, actually, hang on, we need to kind of step back because maybe all of these things are meant to fit together, or whatever their kind of global strategy is. We can't do this now, but we'll be back. I mean, was it?
Oh yeah, I would say there was a handful of groups who said, this is still a little bit early for us. Because again, remember, we're still just at a PEA and we're only 2.5 years into this. And so, they're like, we're going to keep an eye on it and we'll come back, feasibility study stage.
Right. So, well, why not the pressure? I mean, given what you mentioned, one of the reasons people kind of press the button is what's going on in the rest of the marketplace and, increased competition. They don't want to miss out. And you've also got the kind of conversation that goes on with, hey, big companies don't need studies. They'll just look at the data, create their own model, and they'll decide whether or not to move forward. So, what's your take on that?
Yeah, no, big companies, you've got a whole, they're in mining particularly, right? There's people who work at big companies and people who work in the junior mid-tier sector. The people in big companies are a little, again, it's big companies anywhere, you work there because it's bureaucratic, safe and low risk. And again, I used to work at big companies, so I know exactly, what that group looks like. And, no one wants to take a chance or a risk that could get them fired. So, I want to wait. Yes, we have our own technical people and there's no way we would ever do anything without our technical people doing something, but it would be really nice for, recognized engineering firm to complete their full feasibility study, so that we've got at least another, data point to emerge. Would be even better if, if there was a deal done in another deposit that kind of looked like it, that they might want to step up and do something with. It's, inertia is, there's a lot of people that are risk averse and very inertia driven. And so, that's why with projects, you need to, the successful recipe is to advance these things as aggressively as possible to sort of overcome that inertia. You need to make it clear. It's like, if given another 6 months, or they think this thing isn't going to be bought in the next 6 months, then they won't do anything. You need to be resource done, PEA done, feasibility study done, get financing partners, in place, or project partners, offtake partners in place, as quickly as possible, so that you create some tension with them that, oh, geez, if I wait another 6 months, which I would like to do, because then I don't have to make a decision. But if I wait another 6 months, it is going to get, significantly more expensive. So maybe I will, step in at this point in time.
Okay. No one got fired for buying IBM. Used to be a phrase my dad used to shout at me. Okay, so no one wants to make $1 billion mistake in mining terms. So you're advancing things, resource, and then feasibility at the end of this year puts you in a strong position. But as you say, it was a means to an end to get the cash to allow you to do that.
Yeah, exactly.
Okay. Let's talk nickel. Yep. Thank you for that.
Yep.
Sorry to kind of
no problem.
throw that on you. It was just a conversation going on in percent, within the app that I thought was quite a good one. Some really good.
It is really good.
Right?
It is really good. If somebody has a project that looks like 25 other projects in the market and people aren't interested, then that's a red flag. If it's something different, don't panic. That's the key message there.
Okay, let's talk nickel. So what's happening in the nickel world today? Let's start with price.
We're surprisingly in a relatively narrow range. Again, liquidity in the market remains pretty low. Inventories also flat. Again, I think that's going to be one of the key drivers here in terms of people looking to see, are things really getting tighter, or they are really sort of getting looser and starting to see inventories build up. We had one little blip, but it's kind of come back down to the same 72,000 ton range. In terms of the various physical markets, we've seen sulphate prices flat in China. So again, that is a good sign, and we'll see whether transactions emerge. Again, when prices are really high and after a big move, purchasing managers, again, you want to make sure you have enough inventory, But as long as you think you have enough inventory, then you don't want to have any extra on hand, because if the market drops 20% or 30%, then again you're going to look wrong, and that's the mentality of a purchasing manager. So we'll see what happens on the NPI stainless side. It is getting a little softer. It's tough to tell whether that's due to, we've got some pretty severe lockdowns in different regions in Shanghai, which is having an impact on economic activity. So that's something that I'll be keeping an eye on over the next 3 or 4 weeks to see if it was just a blip. And then as the lockdowns ease, things head back in the right direction. But we'll keep an eye on that. And again, particularly because one of the 2 big markets in China is stainless markets, was locked down for a bit over the last few weeks.
And EV sales up year to date, not bad. But I think something like 100%. I mean, that's got to help the narrative. What's it do on the ground?
Yeah. So again, with these things, you always have to remember that you're going to see destocking, restocking at different points in time. And the key is to look at what happened in the end markets, because again, this restocking, destocking noise will eventually get sorted out and pulled through by the downstream market. And so it was, very, pleasantly, surprised to see, EV sales up 100% year over year in the first, 2 months of the year. Both January and February were in and about the same number. So some very consistent momentum. And remember, that's where you've got, supply chain issues with, car components, limiting the ability of some of those car models to be actually made and delivered. You've had COVID surges in different parts of the world that have also, led to things slowing down a bit. And despite those, we're still seeing 100% growth in EVs, and they're now at a 9% market share. It's 8 years until 2030, and if you've got your doubling rule of 70 in terms of growth rates that are kind of allowed, we can only grow at 15 to 20% a year to get to the 30% threshold number that most people have for 2030. With what, and again, we're not going to see 100% for a long time, but it's very easy now to start to see 40, 45, percent penetration rates in terms of, sales, by that point in time. So, to me, that's the key. We don't have enough nickel for 30% penetration. I'm not sure what's going to happen if we get to 40% plus penetration, which looks like, we're headed to in a number of different markets.
Right. And what's your thoughts about how this thing moves forward? We're in a little bit of a lull at the moment, which we've talked about over the past few weeks. We've obviously had the Qingshan situation in terms of the shorting. It's obviously having a big impact. LME's handling of the situation has had a big impact. Equities slowing down a little bit. Looks like some people coming off a bit. What's your sense of the mood right now, and perhaps what the rest of this year looks like?
Yeah. So again, we're pretty constructive on the entire year. At the start of the year, still believe that to be the case. You're going to have that 100% growth in the EV market. That alone is going to give you pretty close to double-digit growth in demand. And if we get any kind of growth in the stainless market after the double-digit growth that we saw this year, then you will see a fairly significant growth in the market. We've got a small surplus this year. I've talked about the fact that we will see big NPI discounts because the market has to absorb a lot of NPI, and we've seen that in the first few months. INSG had their year-to-date February numbers out, and so demand up 6% already. Supply up 13%. Pretty much all Indonesia, with some contribution from the rest of the world because they had such a crappy year, which is showing about a 3% surplus. One little asterisk I would put around these numbers. Indonesia is the biggest contributor to that supply growth, and Qingshan's the biggest contributor to supply growth in Indonesia. And given that they've got a massive short position, Chinese companies sometimes manage the numbers they report. So, we'll see what happens on that front as the year goes on. But what I expected is some bumpy, and I've talked about the price going back down to $9 early in the year prior to the fireworks. Not sure that's going to happen. We're still due for a Qingshan talk down, and we'll see if that happens. But once we get through the first half of the year, once we see EV demand growth still stay in an 80 to 100% range as the year goes on, that physical demand number, will start to show up if we see sulfate prices finally start to creep up. Once those sulfate prices start to move up, and people who've been nervous about holding extra inventory will all of a sudden, okay, now I want to buy some inventory, and you'll see a little bit of a restocking frenzy. So, I think that happens, towards the end of this quarter, early third quarter, and that's what helps pull the market up to into the next level. From here.
So let me ask you, so I'm going to jump to the macro with regards to recent events, which is obviously the Russia-Ukraine situation. And we said, well, that's had an impact in terms of the flow of commodities around the world and sanctions, et cetera. But, most of the conversations we're having about mines are yet to get into production. Like, your own being an example of that one, where you're, the companies are 3 to 5 years out before we get into production. Why does Russia have an impact on those sort of development companies, pre-production companies today? I mean, it's a long time for this to kind of play out in a number of ways. So why such a big impact, or why such a big opportunity?
Yeah, so the key here is, if you look at the overall market, you've got 2.6 million tons. 1.6 of that is China and Chinese controlled parts of Indonesia. So the rest of the world only has 1 million tons of nickel to effectively play with. Russia and the disruption there was 20% of that 1 million ton number. So there wasn't much nickel to go around. That 1 million tons has been shrinking each year for the last 6 years. And we now have this massive new source of demand from the EV sector in the West, and North America and Europe and so forth. And so just in terms of getting physically nickel that's not Chinese controlled, is already been a big driver. And then with the war in Russia and Ukraine, making another 20% of supply sort of questionable in terms of whether that's available to these companies. They were already thinking localized supply chains. I want a mine here, a processing plant here, and I want my auto factory there, battery plant and an auto factory, in a relatively compact geography. And so, this Russia-Ukraine situation has already just taken that supply, localization of supply chain, way up the risk curve. And so for us, it's a massive opportunities, so when you're looking at, opportunities, the closer you are to the major car makers, that's going to be a key factor over the next 5 to 10 years as the market evolves.
Okay. So it's more about planning implications around capex, implications around where money's coming from, and where supply is going to. So those decisions need to be made well in advance, or understood well in advance. So Russian sanctions, that's how it affects decision making today. So it's just, again, it was a kind of question I sent in about, well, hang on, how on earth would such an effect today, sanctions today, affect decision making way out? But it's not way out, it's today.
Yeah.
Okay.
Yeah. No, yeah. It's for the auto companies, I was nervous about where I was going to get my nickel. 6 months ago, I am 5 times more nervous about where I'm going to get my nickel today, which means I as a US European auto chain participant, are going to look for those even more intensely at those projects that can help me get some local nickel sooner.
Right. Okay. So bring back some certainty into the mix. Okay. Let's. There's two more things we're going to talk about. We're going to talk about maybe some interesting developments in the market. We've got three conversations, and then perhaps I think the klaxon of despair will be sounded at the end, because I want to talk to you about some of the less salubrious entrance into the marketplace. Right. So Ragnar Metals, what can you tell us?
Yeah, interesting result this week. Again, from these conversations, generally, I don't try to, there's very few good good opportunities. So again, in terms of right team, which is always a key spot. The chief geologist there is a guy named Neil Hutchison, who I've met a few times when he was with Poseidon Nickel. He made a step out discovery at Lake Johnson during that time. It was about 6 or 7 years ago. And before that, he worked with a company called Jubilee, which got bought by Xstrata back in 2005. And they had a great track record of greenfield nickel discoveries in Western Australia. So, this is somebody who's actually found some nickel in a new area. The other big thing is in terms of, right area. It's in Sweden, Finland. There was a smaller, lower grade thing close to surface, and they figured out some of the structures. And so, they came up with a 145 meter interval that was, 0.56 nickel, 0.5 copper, a little bit of cobalt, with a higher grade 0.9, 0.8, 0.08 cobalt. Again, it's deeper, that would be a home run at surface. But the fact that they're kind of getting that decent grade thickness intervals, and they think it potentially could, the structure could run up to surface at a different spot, where the original lower grade stuff. So this is something I would keep my eye on. It doesn't seem to have run up yet, unlike most Aussie companies with Aussie discoveries in Western Australia. This is interesting, and I will definitely be something I'll keep an eye on going forward, because again we do need some truly new nickel discoveries out there, and they're in the same zip code, same part of the world. The Fennoscandian belt, 1.8 billion years is one of the nickel 2.7 billion years is one of the nickel magic numbers. That's where our deposit was formed. 1.8 billion years is another magic number in terms of good nickel deposits, and they're in the same Fennoscandian belt. That's Sakatti, which is owned by Anglo American, which is one of the best discoveries made this century. So definitely something for people to keep an eye on.
Okay, so Ragnar Metals, Aussie company, but sub 20 million bucks. So it's a small one, but good team. Okay, and then our old friend Horizonte Minerals. Yeah,
congrats. Glencore has increased their stake up to over 5%. Again, I think you'll see this one potentially now with nickel at $15. They, I am sure, are getting the laser beams in the office from the takeout snipers, because congrats to the team to be able to push that forward into construction. With the market being where it has been over the last few years, which prior to the last 18 months wasn't necessarily so supportive of nickel projects, but it's one of the few new sources of supply. And the other key point there is, it's a ferronickel project right now, but there is no, they've got another deposit they're looking at, but there's no reason that ferronickel plant can't be then modified to make matte, to then feed the battery sector. So, I am sure the Glencores of the world have that, in their sights, and it would be an excellent, Western addition to nickel supply at this point in time. So, Glencore doesn't do a lot of at-market equity investments, I can tell you that. So the fact that they've done that suggests they think there's a lot of upside to that story. So
on the ferronickel side of things, I remember sort of a couple of years ago looking at them, sort of questioning the cost of the plant build. I think probably for the other project, wasn't it? Would that have been right?
With the ferronickel plant, it seemed a little low relative to some of the other ferronickel plants that have been built. But they're starting at kind of the right scale. And then they've got a HPAL plant that's going to be a little more challenging on another property. But this one is on its way. And again, when if you can justify it at $8 a pound and nickel prices are 15, that gives you some cushion. If the capital costs don't quite come in were as expected. So I think,
No, I was just reminding myself, because it was like I think the questions that we had around the cost of the HPAL plant build, I think they were meeting 650 million bucks versus the plus 1 billion, 2 billion, 5 billion, 10 billion seen elsewhere. So it'd be, but like Glencore must have done their diligence, and with the ferronickel stuff, they must like what they see clearly, and have a plan and a balance sheet.
Yeah, it's not. I mean, it's a 500 million market cap right now, so chunky, but the fact that you've got a very long, relatively long life, decent size producer coming down the pipe there. So.
Okay, well done, Horizonte. Congratulations. Also, in talking of votes of confidence, IGO Group taking 15% of Western Areas.
Yeah, so they had an announced transaction back in December with Western Areas, and obviously a nickel asset is worth one price at $20,000 a nickel. It's worth a different price at $35,000 or $40,000 a ton nickel. So they've settled to pay about 15% more to be able to get their deal done. So that's moving forward. Again, Western Areas has been a standalone nickel producer for about 20 years. It's always until nickel mines came along. It was really the only sizable pure play Western nickel producer. And so it always traded at a fairly premium valuation. With the emergence of nickel mines, it was, their joint venture in Indonesia with Tsingshan, had a little bit of risk around it. But, again, as political risk goes, it was relatively low given, the connections, but it created another large scale pure play producer with a much steeper growth profile. So that some of that high valuation came out of Western Areas, and it finally got picked up at this point in time. So the team there is finally cashing out, which is I'm happy for them. I know a bunch of people
Absolutely.
there. So
so that's all the good news. Now,
yeah,
we've talked every now and again. We've talked about what you need to look for when you're investing. We've told you, what good looks like. We've also pointed out what not so good looks like. I think we're just going to do a little bit of that right now, because noticing a few new stories out there which perhaps get a little bit of a red flag from me. So are you seeing the beginning? Well, obviously at these prices, it makes sense. It was obvious. We called it early on. So what are you seeing out there?
Yeah. So the sort of the tidal wave of expletive that's sort of come crashing in the market is starting to emerge. You're getting to see more and more nickel companies and more nickel plays. So first off, if they press release the fact that the geologist went to the bathroom on site, that's, and you get this whole series of tiny little steps that create no value, but that's all they've got to talk about because they don't really have anything of true exploration value. Get nervous. What you need to look for is it something that's really new? Again, maybe it's something where, there was some drilling before, but they have a new theory, or, it hasn't been explored for a very long time. And there's some new technology that could unlock, on the opportunity there. That's, the group that we talked about earlier, there was some stuff, some shallow, lower grade material, but they realized that there's some potential opportunity at depth, and again use the right geophysics tools to look for some of these targets, and it's these new deeper targets that are really have uncovered something. Again, is it a proven team that's actually discovered something before? It takes a certain skill set, both from a financing and a geological approach, to be able to do something. And if they've got, if they've done it before, they'll have a group of followers as well who will help, support the share price. And so, look for that proven team, and then again, is it a proven team on a new property or a proven team on an old property with a new, doing something different? So that's really,
But that's the hard thing, Mark, right? You go, especially if you're new to this or relatively new to this, you go, some teams will go, hey, this is an old property. You've had a few companies have a go at it. We've got loads of data. That's the good news. We've got loads of data. We've been able to reinterpret that data, and it's awesome. Let me tell you why. And they position it like that versus, well, they did a lot of, the previous companies did a lot of drilling, couldn't find anything, but it was the commodity price at the time. That's why it didn't work, right? So don't worry, it's still a great investment for you here. As opposed to the bits that I'm focused in on, which is multiple companies have had a go at this. None of them have been able to make it work. because there's nothing there. Right? You're always going to get this reinterpretation story, the AI story. You're going to get they didn't drill deep enough, or they didn't know what they were looking for. Actually, we've come up with a new thesis, which is going to allow us to unlock the potential. You know what I mean? In that environment, I'm like, Jesus, where do I look? Who's telling the truth? It's hard.
Oh, no, it's very hard. But I think the key thing is, is it a proven team that's done it before? Because again, there's a lot of real, 9 out of 10 opportunities in this space, are crap. And so, the fact that a team that's done it before chooses this opportunity to do something with should suggest that there is something of substance there, because again, good teams won't waste their time on crappy assets. Number one. Number two is, again, if they talk a lot about all the data that they've got, but really not so much about what the theory is and how they're going to test that theory, and then how quickly they get around to testing that theory. So, if they talk about all this upside, have a vague plan, and really don't seem to drill anything new and just go back and drill in the same spot, that's bad, right? If they say, okay, we're going to do this or we're going to do that, and then we're going to drill here, if these two things work out, and then they drill there, that again should suggest to you that they have a real concrete plan in terms of how to add value, to that specific property. But watching where they drill is the key, the key thing. You can give them 1 or 2 holes that are sort of step outs or confirmation of prior drilling, but if they're not really doing any new exploration, then that should be again another warning sign. So you need to see when that new exploration is going to occur and how quickly they get there. The other part of it is do they kind of show you the scale of what's there? So again, some guys might go, oh, we'll just extend it down a little bit, but if it's if they're doing very short step outs and they don't show you a picture of what the scale of it could be, then, again, you really don't have a sense of how big this thing could be. So, look for them to give you some context of, oh, okay, this is a fairly sizable target that, could generate a deposit. You could generate a deposit as opposed to a couple interesting in intervals. So, those are the key things. Right team. Is it a proven team? Are they doing something new on an old property, or is it a new property that hasn't been drilled, for a long time? And then, do they give you a pretty good idea of what the targets are, and how quickly do they get around to actually aggressively exploring these targets, as opposed to just generating news releases, twinning old holes that were done before.
Yeah, I agree with you. In terms of the I know we say it all the time for people that experienced listening to this. You'll have heard it a lot, which is basically the team's really important, because successful teams tend to, success begets success typically. Yep. And it's also, very, very attractive because people have made money for shareholders before. That's very, very attractive. And it also attracts money, which allows a chance of a company not to be cash constrained and actually do the things it wants to do. So good teams will not damage their reputation because they spend a lot of time building it up with their previous success to then go and knock it over by just sort of treading water on some crappy asset for a while until they find the next gig. So that's why good teams are really, really important. Okay, well, I think maybe next session out we should look at a few more companies and sort of see what's going on. Maybe even sort of possibly look at some of the new entrants into the marketplace, because there'll be good ones amongst the mix, I suspect. Pointed at one today. Let's keep doing that. Mark, okay, well, I better let you go. I know you've got a busy week, short week, but a busy week. We'll see you next week, okay?
Sounds good, sir. Take care.